Hi, my name is Celeste and I'll be going through question 1. The primary activities of SIA are passenger and cargo operations. What it means is that they provide services of transportation from one country to another for both people and goods. However, in recent years, these operations have been shown to be intertwined. The financial performance for 2017 and 18 is substantially better as compared to 2016 and 17. Just by looking at the profit and loss statement, you can see a huge increase in profit of 441.9 million in 2016 and 17 to 936.8 million in 2017 and 18. And this is mainly due to a dramatic increase in their operating profit. As a statement of financial position, PPE increased largely from 16,433.3 million to 19,824.6 million. Other than that, focusing on liabilities, there is a sharp rise for long-term liabilities from approximately 1.8 billion to 3.2 billion, and net current liabilities also increased dramatically by close to 1 billion. The social performance of SIA of both years are barely comparable. For the year 2016 and 17, KrisFlyer partnered up with Make-A-Wish Singapore to enable members of the SIA Group's frequent flyer program to donate miles to the charity, which will go towards fulfilling wishes of the Make-A-Wish beneficiaries that involve overseas travel on Singapore Airlines and subsidiary Silk Air. The SIA Group also actively supports various charitable causes. Silk Air partnered with St. Andrew's Autism Centre to launch Colours Project, an initiative that explores potential employment pathways for adults at SAAC with moderate autism. SIA has a comprehensive fuel productivity program that has been implemented to improve fuel efficiency through engine modification, as well as reduction of airframe drag through performance improvement packages. They remain committed to planning the most fuel-efficient routes to our flights in bid to reduce emissions. In 2017 and 18, volunteers from SIA's Cabin Crew Club for the Community Care collaborated with Fei Yue Family Service Centre to bring elderly and children from low-income families to a day of activities. A total of 2.5 million was raised for community chests, which helped raise funds to empower beneficiaries in Singapore. SIA has continued to remain dedicated to their long-term responsibility of protecting the environment while providing air transportation services of the highest quality. They have in place various programs to implement sustainable practice across their operation to help manage issues such as carbon emissions, waste, noise, and the consumption of energy and resources. In both years, SIA has continued to support educational sector, which provide opportunities to students to realize their full academic potential. Therefore, it is very hard to compare the social performance of the company as there is no benchmark to set against it. Next, I'll pass it on to the next speaker, Owen.
Hi, my name is Kian Leong and I'm presenting question 3. The new lease accounting standard AAS 816 stated that leases are not allowed to account for leases using the operating lease method unless the lease is less than 12 months or low value. And it requires the company to recognize lease assets and liability on the balance sheet at the present value. According to Singapore Airlines Annual Report Financial Year 2017-18, the group has non-cancellable operating lease commitments amounting to 3,127.8 million, and it comprises of engines, aircraft, and property and equipment. Therefore, in compliance of the new lease accounting standard, it is believed that there will be a huge impact on the assets, liability, and profit of the company. First of all standards allow operating lease to be off-balance sheet liability, which means it doesn't require to be appear on the balance sheet itself. However, by following the new rule, it will now be included in the balance sheet. Hence, there will be a new recognition of lease assets and liability, and SIA assets and liability are expected to increase by a great deal at the present value of the lease payment. There's a concern that the impact of the increased liability will cause the gearing ratio to be higher as debt financing are much greater than equity financing. Thus, SIA will have a riskier financing structure. In addition, there will also be a resulting change in the statement of profit and loss. Operating leases are shown as operating expense on straight line basis in all standard. So the same amount is expensed every year, but under the new model, there will be both depreciation and finance costs such as interest expense to be replaced lease or rental expenses. This is likely to mean that equity earning before interest, tax, depreciation, amortization will increase for SIA groups. In a nutshell, implementation of new lease standard will create challenges to their leverage amount and may necessitate updates to covenant calculation with their lenders. However, it provides a more transparency and comparability of leasing transaction for the user. Thank you. Now I'll pass to the next person, David.
Hello everyone, I'm Daven and I'll be presenting on question 4, which is I'll be talking about how the company carries impairment testing, and I'll further explain what the cash generating units are for SIA. Firstly, how the company carries impairment testing is through comparing the carrying value of the CGU against the recoverable amount of the CGU. And this requires estimates to be made of the CGU in terms of future revenues, operating costs, capital expenditures, and so on and so forth. CGUs are in fact any smallest group of assets that independently generate cash inflows. In this aspect, SIA has many CGUs, for example, leases, aircrafts, Scoot, which is their subsidiary company, and investments, so on and so forth. As SIA has a lot of CGUs or assets in general, it's very hard to identify all the CGUs that SIA has. Moreover, by looking at their annual report, one cannot find all the CGUs in play. Thus, through such limitations, we as a group have decided to classify many CGUs into one CGU as a whole. What this means essentially is that for CGUs like hotels, leases, and aircrafts, they are classified as just one CGU, which is known as property, plant, and equipment. As for CGUs like Scoot and Silk Air, they will be then classified into a CGU known as subsidiary companies. This applies for all other CGUs as well. Ultimately, this leaves us with only 5 CGUs, namely property, plant, and equipment, subsidiary companies, associated companies, joint venture companies, and long-term investments. Thank you, and now I shall pass my time over to Kenny.
Hi, I'm Kenny, and today I'll be sharing on question 5 itself. So first of all, let's look at what are the items that are classified under the property, plant, and equipment by SIA. Mainly, it would be consisting of the aircrafts, both commercial as well as the training aircrafts, spare engines, flight simulators, as well as the office equipment. Under the notes to financial statement, the section where the significant accounting policies for property, plant, and equipment, it is mentioned that the recognition and the measurements of property, plants, and equipments are at cost less accumulated depreciation and the accumulated impairment cost, if any. When property, plant, and equipment involves a different useful life, SIA will actually account for it as a separate component, and the leasehold properties that is held by the associated companies are measured at fair value, less the accumulated depreciation as well as the impairment loss, if any. Fair value of the leasehold properties under SIA will have an impairment test performed annually by the independent professional valuers. Depreciation of the property, plant, and equipment is actually based on the cost of the assets, their operational lives, and their residual value, if any, as well as the depreciation methods are reviewed annually and adjusted prospectively. If components of the assets have a different useful life, like I've mentioned, from the remainder of the assets, the component will then be depreciated separately. Looking at this table we have right here, it's extracted from the financial statement itself. It provides us a more comprehensive view on what are the property, plant and equipments under SIA's belt. So in general, for the major items, the group would actually depreciate, leaving over a period to a certain residual value on costs. So what constitutes true and fair in SIA's case? We believe that there is actually no definite answer to this question, and it really depends on the business environment as well as the industry itself. The reason why SIA would choose cost over fair value for the major items such as their aircrafts would probably be because of the limited amount of flights that can be done within the day. It is unlike those production industry whereby their property, plant and equipments can be heavily utilized during their start of their machinery lives and lowered nearing the end. That's the explanation I can think of now for the capacity of flights are fixed. So it is not really realistic to measure using a fair value model. Another thing that we can look at is their exclusivity. It is rather complicated and unwise to be using fair value. So in short, what we believe is as long as the company provides some material information on the financial statement and provides a full disclosure in terms of transparency to help users of financial statements to make economic decisions, it will be deemed as true and fair. Thank you.